right, today, this is AJ, Handyman Process, and today we're going to talk a little bit about taxes. I'll make the disclaimer, I'm not a tax guy, I'm not an accountant. I do have a master's degree in business, but I'm not a tax guy. So everything I'm going to show you, I've kind of learned myself. To be honest with you, it was confusing a little bit to me, even with my education and background, exactly kind of what went where. So today I'm going to talk a little bit about taxes and how they work and are applied at the end of the year, and specifically the IRS Schedule C. Is the thing that either you or your accountant's going to fill out. So if you look at my screen here, you'll see I'm just going to go to Google and I'm going to type in Schedule C template. And it's going to be a bunch of information on there. If you go to YouTube, and there's a ton of accountants making videos on this, so I would highly recommend you go check that out. But if I scroll down, I'm going to go to the IRS's website here, and this is the example of the Schedule C. So this is the form that the IRS essentially needs filled out, and a lot of the tax software programs, your accountant, are essentially filling this out for you. So this is the form itself, and then the IRS also has instructions on how to fill out the form. But I'm just going to highlight a few things. So if you're a handyman, let's say you have two jobs. So I'm a part-time guy. I have a W-2 job, plus I have this. So when I do my income, there's multiple pieces to it. So I'll enter my W-2 stuff first, and then there'll be areas for additional income. And this is where this falls into. This is profit and loss from a business. If you're only a business guy, and I'm specifically talking to sole proprietors or single member LLCs, because if you're a corporation, things get a little bit different. So there's other videos out there for that. I'm a single member LLC, but this also applies to sole proprietors, because essentially the money, as a sole proprietor or a single member LLC, you're actually, as a single member LLC, you're a disregarded entity in the eyes of the IRS. So what that means is your money basically just flows from where you make it right onto your personal income tax return. But anyway, when you open this thing up, there'll be basic stuff that you fill out in the top here. The name of your business, what kind of accounting methods are you using. Most people are using, in the handyman business, are using cash accounting. You can do a quick search on cash versus accrual, but 97% of the people are using a cash account. But then if you go down to part one, you start to see the income. So what kind of money are you making? And so this is your kind of your top dollar number, or your revenue number. What kind of money did you make? And then again, the instructions for all these things are, if you search the IRS's website or search in YouTube videos, you'll find that stuff. But essentially, you're going to figure out how much money you made. You're going to figure out your cost of goods sold. And that's going to give you kind of your starting point, what your profit is. But it's going to get a little bit deeper than that. And that's where part two kind of comes in. So part two is going to break out your expenses. Some of them that you've been paying throughout the year, and other things that you've been tracking, for example, like mileage or home office use. And this is where these things come in. And this is where sometimes it can get a little confusing. Like, do I take this expense now, or is it done in tax time? So this helps with that. So as you walk through some of the categories, advertising. So throughout the year, maybe you're paying for a website, you're paying for marketing and advertising on Facebook or Nextdoor, and you should be keeping track of those things. So you should be using your business banking account, and as you make a payment, like I make a payment every month to Google for some features for advertising, that's just automatically coming out, and every time it hits my expense books, I'm essentially just labeling it as advertising, because I'm thinking ahead that I'm going to have to fill out this form, this Schedule C, so I might as well just get all my ducks in a row and start to put all the advertising in the advertising category, and travel and meals and all the other categories that we'll go through. You should be bookkeeping those things in those types of areas. And there's a bunch of different ways to do the bookkeeping. I use Novo, the bank app Novo, and it's just made my life a million times better. I have a video on that if you want to check that out. But every time you hit an expense in my Novo account, or if you have it, you can just label it right there. It's advertising, it's insurance, it's whatever it may be. So that's one, advertising. Then you get into car and truck expenses. So when it comes to car and truck expenses, you essentially have two options. You can either take the mileage deduction, where you have to track all the miles that you drove throughout the year, both personal and business, and then keep a log of it. This is for audit purposes. If you ever came back and said, "Hey, I claimed 1,000 miles," they're going to say, "I want to see your audit logs." I personally use the Mile IQ app for this, but again, there's a billion different apps out there to help you track that. But from an IRS perspective, you either track the mileage, which is currently 65 cents per mile, or you track all the expenses associated with the car payments, gas, maintenance, so on and so on, multiplied by the percentage of time that you use that vehicle for the business. So it's up to you where you're at. You can kind of run numbers both sides. The simplified method is just the mileage. The more complicated method is the other route. You may save more stuff going the other route, but it is a little bit more of a burden paperwork wise. And you can't flip flop back and forth. Once you decide you're going to use the car, then you use the car and you stick with that method. Again, consult an accountant if you want more details on that stuff. Commissions and fees if you paid any contract labor. So this is where all of your 1099 guys should be. So if you're paying anybody 1099, again, you should be categorizing it. In my Novo app, I just hit contract labor. So at the end of the year, I can see all my contract labor expenses and it goes out the door. I won't get into depletion and depreciation because it gets a little involved. I also won't get into employee benefit programs because I don't have that. Insurance. So I run liability insurance. So my insurance payments, the sum for the year goes in here. I am not doing interest, mortgage, legal and professional services. So if you are hiring an accountant, an attorney, or anybody else to give you legal or professional advice, you could just bookkeep it here. And again, the same thing, whatever bookkeeping software you're using, you're just tracking that stuff throughout the year. Then you get into office expenses. What is it taking me to run my home office? I'm sitting in my home office right now. I have computers in front of me. I have peripherals for the computer. I have printer. I have ink for the printer. All the stuff that you use for a home office or your office expenses. I have books. I think I have a couple of Alan Lee's books here, which I recommend. Also, any books I get, I kind of all throw into those office expenses. So I read quite a bit, and I just keep track of it there. Pension, not a problem for me. Rent or lease, I'm not doing any of that right now. Repairs and maintenance. Supplies here, this is things that are outside of your cost of goods sold because there's another worksheet for cost of goods sold. So this is just general supplies to run your business outside of, from a handyman perspective, all the supplies you need to complete different jobs. Taxes and licenses. This is, again, this one's a little bit tricky. You're required to pay quarterly estimated taxes throughout the year, and that's kind of coming out separately as an owner drawer. You're keeping track of how much you paid in taxes because there's a separate area in your tax return where you fill that out, but this is not that kind of tax. This is additional, usually state taxes or licenses that you may have to pay. Travel and meals. There's a lot of rules when it comes to the meals, but if you're out and you're having a meal and you're discussing business, you're meeting with a client, those meals are deductible up to a certain percentage. They've flip-flopped around in the last couple of years. But make sure you're using your business cards to take care of that stuff. You're tracking those particular meals. You're uploading the receipts and whatnot. Utilities, if you're paying anything specific for that. Wages, if you have employees on there. And then kind of other expenses. So this is kind of a quick high-level overview of that. There's a few more areas in here that I'll touch on. All this stuff, as you walk through the sheet, it kind of calculates up. The other big one that some people like to take advantage of is the home office use. So from a home office perspective, the IRS allows you to have a deduction for using your home as an office to conduct business. And similar to the vehicle stuff, there's two ways. There's a simplified way and there's a more complicated way. The simplified way is you can claim up to 300 square feet, current rules, at I think it's $5 a square foot. But it has to be dedicated space. Like it has to be an area that you do nothing else. You have to imagine if the IRS showed up tomorrow and looked at your house, would they show up and would they look at your area and it's used for nothing else but office space? So you have to be truthful there. If you decide to go beyond that, you're taking a risk. I wouldn't recommend that. So really look at what area you're using. In my case, I have pretty much my garage. Half of my garage is all handyman stuff. So that's what I use as my home office calculation. If you want to get a little bit trickier and not use that square footage times the $5, what you can do is use the complicated method, which is looking at the total square footage of your house, looking at the amount of square footage that you use in that house. So let's say you have 1,000 square foot house and you use 100 feet. 10% of your house is being used for personal or for your business. You can then apply that 10% against all of the money associated with your house. So mortgage interest, not mortgage, but mortgage interest, electricity, phones, anything that is going into the house to keep the house going is you can now use 10% of that and deduct that. Again, dig into this stuff. This is just for your awareness. If you weren't aware, go out, do your own research, talk to your accountant, say, I heard that this guy is saying this stuff. Is this true? If you find out it's not true, let me know. But I've been doing a lot of research on this, so hopefully what I'm telling you is accurate as of whatever today is, March 22nd. Anyway, this was confusing to me at first. I didn't know. I was confusing the two. When am I tracking mileage? When am I not tracking mileage? Because some of the apps I were using, I was just doing things backwards. So just keep that in mind. Some of it's at the end of the year, like car and truck expenses and home offices, and some of it's throughout the year, like advertising and cost of goods sold and whatnot. Anyway, I hope this is helpful. If you like this kind of information, please subscribe to the channel, like it, share it on social media if you think there's value in this. My purpose and my goal with these videos is to teach other handymen what I learned kind of along the way. I'm not building courses. I'm not doing any of that stuff. I'm just sharing what I know. So in some of my videos, you will see some affiliate links, just because I tout some of the things. I mentioned Novo several times. If you go back to my list, I only tout the things that I use and I love. And Novo, even if you got your own Novo app, if you recommend it to somebody else, both you get $40 and they get $40. So even if you don't use my link, sign it up for yourself and start telling other people, just because I think it's fantastic when it comes to tracking this stuff. Anyway, that's it. I hope you enjoyed the video, and if you have any questions, go ahead and leave them in the comments. Thank you.